Hi everybody, it's Kia again from Car Bookkeeping Specialist. Thank you so much for joining me once more. Today we're going to be looking at how to save money on your corporation tax bill as part of our Taxes the Basics series. So I'm going to hopefully keep this one quite quick and hopefully keep it pretty simple for you guys. Let's jump straight in. The example in this company is Sally, is a limited company director of a goods retailer in the UK. She has 2 employees. She's due to make a profit this year. After paying corporation tax, her process is that she takes home half of the remaining profits as dividends and she reinvests half back into the business. Sally decides to speak to KBS to help her with the corporation tax after running an initial calculation herself. So let's take a look at these figures. You're going to notice that they're pretty much the same. Sally, sales revenue this year was £70,000. Cost of sales was a total of £10,000. That's on material, labour, and expenses, blah, blah, which leaves her with a gross profit of 60 grand. Very good, very nice position, Sally. I'm happy with you. Then she deducted her overheads. Now she's got 2 staff members, so she's paying 30 grand, and that's including all the taxes and pensions. Business rates, stationery, office supplies, and rent. It's not realistic, I know, but it's just to make the figures work. That's the reason I did like that, which means her total expenses are 35.5 grand. And clever Sally deducted her mileage allowance, the full mileage allowance that she has for the year, which is 45p per mile for 10,000 miles, which leaves her with a net profit of £20,000. 19% corporation tax on £20,000 is £3,800, which leaves her with £16,200 of profit to use for herself. How does she use it? She splits it in half. She takes half of it as dividends, £8,100, and half she reinvests back into the company, £8,100. Let's take a look at what I decided to do for Sally. Exactly the same, gross profit's the same, expenses are exactly the same until we get to here where the rent is. Then we decided, after looking at some of Sally's receipts and some of the transactions in her bank account, that actually she has got viable, tax deductible business meetings in there that she's been having regularly every month that you are allowed to deduct for tax purposes. And that totals £4,800. And actually, we decided to advise Sally it's better off for you to take a bit of a salary, a very small salary from your business as well. So we give her an £8,000 salary, which means her total expenses, 48,300, and we still include that nice mileage allowance. So her net profit after all the expenses is 7,200. That doesn't look too good. That looks pretty low when we compare it back to over here with 20 grand. Her corporation tax, 19% on that £7,200 is 1,368, which is nice and low, good compared to that 3,800. But the retained profits in the business is 5,832. That's really low. Why would we want to do this? She splits the retained profits, takes £2,000 home for herself, and reinvests £2,000 back in her business. This is not looking good, but let's actually look at the detail of what really happens here. Of the 70 grand income that she made for the year, the business uses and keeps for itself actually £58,100. That's what it used to actually run its business during the year. The total tax it pays is £3,800, and Sally got to take home 8 grand. So she's pretty happy. All right. When we do the other calculation, actually the business kept for itself and used 57,700. That's less, I know. But the tax was 1,300. That's less tax. And Sally actually kept 10 grand for herself, 10,900, close to 11 grand. So what does this mean in real terms? In real terms, it means over here, yes, the business used 57 grand for itself, so it spent less that it kept for itself, that it used from its income to continue trading for the whole year. It spent less in tax because its profits were lower, but Sally got to take home more. So she took home £2,000 in dividends and she took home £8,000 in salary. This £8,000 that she took here we actually turned it into a salary for her. We said, don't take it as dividends, take it as a salary. Why? Because we're going to look at salary a little bit more detail in the next video, which is national insurance contributions, but I'll give you a little sneak peek because the amount of salary that we've given Sally in this example is below the other tax thresholds for national insurance, pensions, etc., which means that the company doesn't pay any tax on it and Sally doesn't pay any taxes on her salary either, so she gets that tax-free. The rest of it is dividends, so you get £2,000 dividend allowance tax-free each year as well, so she only has to pay dividend tax on this £916, which is 7.5%. Over here, she would have to pay dividend tax allowance on £6,100. This is assuming that she's already used up her personal allowance as well. But at the end of the day, if this was her only income, she's still under the personal allowance threshold if she took 8 grand or if she took £10,916. So either way, it doesn't really make that much difference in that sense. The main point here is she paid less in taxes. She kept more money for herself, and the company was able to use its own funds a bit more widely. So I think it's time for you guys to go do your own corporation tax calculations. Work it out, figure it out, take a look at your income, work out what does it cost you to trade, work out your gross profit, look at your overheads, note them all down. And the important thing here is that these business meetings, this could actually be anything. So many times I see business owners who just genuinely forget to account for things because they don't have the records in front of them. This is why record keeping is so important. I've got clients who come to me with her purse is bursting with receipts, literally. And you pull those receipts out, I'm going to find all kinds of things that can be claimed and can be used to reduce that corporation tax bill at the end of the year. Make sure you're claiming for your mileage. It's there. Any other benefits that you're entitled to, tax deductions that you're entitled to, claim for everything. That's the point. It's this business meeting here about £4,800. You will find £4,000 worth of extra expenses that you completely forgot about. This happens a lot if you cross over your accounts and use your personal and business accounts interchangeably when running your business. Please stop doing that. Use one account, keep all of your transactions in one account, and it's going to make this process a lot easier for you. So make sure you're calculating absolutely everything. Keep that corporation tax bill nice and low. Take the optimum salary for a director, which we'll be talking about again in the next video, if you can, for your business, and then utilize your dividend allowance and all those types of things there, just to keep yourself working the most efficient way and keeping as much money as you can for yourself. So that's it for today, guys. Once again, this type of calculation will be available in the corporation tax guide that I'm going to be giving you guys, able to download from the website with just one click. So please do check that out. If you do have any questions, comments, drop them below. Remember to like, share, subscribe, follow, and comment. And I'll see you guys on the next one. Thank you so much. Bye.